All right, welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We will wait just a few minutes to get started here. We did pull up the chat on the screen, so as you tune in, you can drop a comment there in the chat. We'll wait just a few minutes here, give everybody a chance to jump on and let us go live on all of the different platforms. Hope everyone's been having a great week so far. We've got a great topic today that people have a lot of questions about. So it'll definitely be great for Jose to clear some of that stuff up and empower some loan officers out there to be able to do some other types of loans that they may not do on a regular basis. So, again, for those just tuning in, feel free to drop a comment there in the chat. Good morning, everyone. Good morning there, Nick, Jamie, Mark, everybody dropping comments in the chat. We will get started here in just a couple of minutes. Good morning, Chrisita, Samantha. Shout out to the Mortgage Calculator team tuning in and anybody else out there. Get started in a second here. Remember, we do this show every weekday at 11 a.m. Eastern. So make sure to tune every day as we go through the different rates. All right. Arjun, Matthew, Geneva. Thank you to everybody tuning in. All right, it looks like we are good to go. So we will go ahead and take the chat off the screen and then we will get started here for today. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans, and we do this show every weekday at 11 a.m. Eastern, where we go through live rates of actual programs, and then we do a deep dive into a different topic every day. Today's deep dive is definitely something that a lot of people have questions about or misconceptions about, which is manufactured homes. And so Jose is going to go do a deep dive into that and probably clear up a lot of things for us out there regarding financing manufactured homes. So we'll get into that in a little bit. But before we do that, just like we do every morning, Nick, let's go ahead and pull up our pricing tool and see what the actual rates are looking like today.
All right, thank you. Let me go ahead and switch my screen and we will get started. So, as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We have over 300 licensed loan officers, and we're licensed in 22 states for primary second homes. And we can do our DSCR business purpose loans, which will hopefully be one of the examples that Jose gives later, for 44 states, right? So those are available for manufactured homes, which will be our topic today. Now, if you'd like a full loan estimate, a full breakdown, please get with one of our team members. This tool will show us the general pricing for our programs and the APR. So if you'd like a full breakdown of what makes up all the different fees in that APR, please get a full loan estimate. But this will allow us to check out the rates this morning. It is May 10th, just after 11 a.m. Eastern, so most of our standard programs are live. So let's set up a basic scenario and check it out. We're going to set a 400,000 loan amount. We're going to set an LTV of 80% loan to value, 20% down payment. We're going to set a desired price of 99. That means we're going to ask the computer to find the best rate at one discount point in cost. That's the most common request we have. Most of our buyers or borrowers are asking to buy down the rate a little bit. And then we're going to do our examples on conforming conventional loans. We'll compare that with our FHA programs this morning. And then we'll check out our expanded guidelines where we have over 5,000 additional loan programs with alternative income. We don't do VA or USD Live. Remember, VA is only for eligible veterans. So if you are an eligible vet, we definitely appreciate it and would be happy to quote that up. But since not everybody is, we don't do that. And USDA, same thing, only for properties that are in eligible areas. So if you do happen to be shopping in one of those areas, please let us know and we'll quote you up, no problem. So let's start with conforming conventional. We're going to set up a general scenario here of purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, you use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these general settings, let's check out the conventional rates this morning. So it went back down a tad. We're back at what we were earlier this week. And I believe with the recent announcements that we just had, we have some inflation data that came in this morning. I think we will see a downward trend towards this afternoon as well. But it's always good to see downward trend. So right now, 6.5 rate for 1 discount point in costs and a final APR of 6.676. So remember, we always compare APR, so we compare across the different programs. So in this case, we're going to compare the 6.676 APR on conforming. And if our customer would like to check out our FHA or may not qualify for conforming, typically the next option we check out is our FHA programs. So we'll set this back up to the same exact settings. Just switch this to FHA. Everything else will stay the same. And that way we can compare an FHA program to the conventional. I don't recall what it was yesterday. I think this is the same as it was yesterday, but check out the last episode, guys. So right here, the best option the computer found, 5.625 rate for 1 discount point in cost, and a final APR of 6.227. So remember, when we're comparing across programs, the APR is the actual final cost. So for a borrower that qualifies for both, in this case, FHA is actually a little bit cheaper, even with the upfront mortgage insurance and yearly mortgage insurance that's included in here. So not very often that FHA has been cheaper in the past, but in this scenario, it's actually a little bit. So definitely recommend our LOs out there. Make sure to quote an FHA option, and our borrowers out there, check out FHA with the recent updates. Now, if for any reason our borrower doesn't qualify for conforming or FHA, let's set this up to the same thing. Many of our other lenders and banks out there don't have other options, but thankfully at the Mortgage Calculator, we have over 5,000 other options under expanded guidelines. This is also known as non-QM. So if we keep everything else the same, we do notice one new option pops up, and that's our income verification. So typically, we're going to choose a expanded guidelines non-QM option to use alternative income. So full doc means 2 years tax returns. That's what is required for FHA and conventional. So typically we choose this option to go through all these other options we have. 1 year, 2 year, alt doc, those are general. But the specific programs, asset related programs, business bank statement programs, DSCR programs we'll talk about for investment properties in a minute. Personal bank statements are our most popular. We have VOE, 1099, P&L, all kinds of different options. But for the demo today, we'll use personal bank statement 12 months. That's our most popular non-QM option, and that's for our self-employed borrowers. Most of the time, our self-employed borrowers have 2 years of tax returns, have various write-offs that may reduce the income they qualify with, so they may not qualify at all for the home they're looking at, or may need to look for a little more income. So in this case, we're actually going to use 12 months of bank statements, no tax returns, to determine a debt to income ratio using those bank statements, the actual cash in the bank. Many times our self-employed borrowers qualify for a much higher payment and much higher loan amount. So these are great solutions for our borrowers who would otherwise not be able to get the home they want. So the rates are a little bit higher, but let's check it out and see the non-QM bank statement options this morning. So the top option the computer found here, actually this one is a little bit cheaper, 7.25 rate for 0.875 discount points and costs, and a final APR of 7.326. So for just a little bit higher than conventional, remember conventional was at 6.6 something. Here we're at 7.3 something using a totally different income method. So our borrower who could not qualify conventional, just a little bit higher cost here to use their bank statements and then qualify for the home they want. So great solutions here for our borrowers. We have a ton of different options at different rates. You'll see here there's hundreds of different programs. Some of these may allow things like foreclosures, bankruptcies, other little guideline things that we can do. So some of these at the higher rates do allow some additional things. Now, before we pass it off to Jose to go over manufactured homes, we always want to do our live pricing for investment properties. So we'll go back here, set investment property as our occupancy, set our LTV back to 80%. So we're still doing 80% loan, 20% down payment. And we're going to compare our investment property options for conforming and expanded guidelines non-QM. Remember, FHA, VA, and USDA cannot be used for an investment property. So let's set up conforming. We'll keep everything else the same as all our other demos. And all we've done is switch to investment property. So let's check out the conventional rates for investments. About the same as it was yesterday. Here we have a good option for 7% rate for 3.5 discount points and costs and a final APR of 7.260. Remember, the GSEs that operate the conventional loan programs have added additional adjustments for investment properties. So that's why we don't find any options for 1 discount point in cost. There are some high fees here. So many times our investors would like to go to a higher rate. For example, 7.49 for 2.625 discount points and costs typically would be something an investor would like to see. But many times we can't get this reduced down to what they would like of 1 discount point, which is what we're going for. So definitely recommend our investors check out the conventional rates, but also compare that to our non-QM, where we can actually go a little bit higher in the rate to reduce the cost. So our final demo here, we'll go to 80 LTV. We'll do investment property again. And this time we'll choose expanded guidelines, aka non-QM. Now remember, with non-QM, we get to choose our income verification, and the most popular option for investment properties by far, our most popular program by far, the Investor DSCR program, also known as Debt Service Coverage Ratio. And that's because it doesn't require any income or employment from our borrower. We're simply going to use the estimated rental income from the property to determine if that can cover the expenses for the proposed mortgage. So if the property cash flows, that is a DSCR ratio of greater than 1.00, aka the rents cover the mortgage expenses for the proposed mortgage. And we even have options for properties that don't quite cash flow where the DSCR ratio is under 1. So there's a ton of different options here for DSCR ratios. We're going to leave this blank for now, but we do have all kinds of different options so that all of these show up. And the other thing we have to select is a prepayment penalty. So for non-QM investment properties, a prepayment penalty is standard. We always choose 3 years for the demo. We can choose 0 if we like. That will limit the loan programs and obviously cost more. And there are some loan programs that allow 5 years, but not all of them. So that does limit our loan programs, but saves us some money in some cases. Most standard is 3 years, so that's what we'll use for our demo. So now let's check out our DSCR rates this morning. So a good option at the top here, a 7.625 rate for 0.85 discount points and costs, and a final APR of 7.7. So a little bit higher APR here, but we've solved our problem for our investor where they now have more cash to play with, right? So reduce the discount points here, a little bit higher rate. As long as the property cash flows, most investors are happy. Now, you see we have a ton of different programs with different DSCR ratios, different prepayment penalty options. There are hundreds of different versions of these programs. Some of these at the higher rates may allow short-term rental income or may allow foreclosures, bankruptcies, other things like that. So please get with our team. They'll navigate which one of these dozens of programs will work best for you. So let me switch my screen here and we will get into our topic for today. For those of you that joined us earlier, we're going to be talking about manufactured homes. So manufactured home, common misconception of what they are. So Jose is going to do a little bit about definition here. But in the general census, right, they are not mobile homes, right? A manufactured home is typically a double wide as well, and it's typically has to be attached to the foundation, and the customers typically own the land underneath of the home as well. So a lot of ins and outs here. You really got to get down to what the property is, and then you can go ahead and quote it up here with our system and present some of these programs that Jose has. So Jose, why don't you do a little bit better job than I did of defining what it is and what they aren't, and then we'll go into the demos.
Awesome. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Jose Gonzalez here. Well, first, like Nick was saying, a big misconception. It happens all the time. Nomenclature is very important here now. because if you're reaching out to your AEs, to your loan consultants, to whoever you may be reaching out to inquire about this type of loan, and you start with, can I get a loan on a mobile home, or I got a mobile home I need to inquire on, you automatically disqualified the product, because a mobile home is not a manufactured home. Let's be clear on that. A manufactured home may have started out its life as a mobile home when it was manufactured at the factory, right? And as long as it has the vehicle trailer, which is what they have when they're created, they have a vehicle trailer, vehicle title. A trailer title basically is what they have on a manufactured home. But as soon as that mobile home transitions to being a manufactured home, that occurs when it is brought onto the site, usually brought on in two pieces, right? Put together at the site, permanently affixed via a foundation to the land, and then has that land associated with the structure. At that point, it was just born as a manufactured home. You got land associated with it. It's no longer a mobile home. Mobile homes are manufactured homes sitting in, I guess, what we would call trailer parks, right? Where it sits on a lot. You pay lot rent. Usually the rent may or may not include water and utilities, right? If it does, then it's going to be a lot higher lot rent. But the key component in there is that you may own the structure, but you do not own the land. So you are basically, that's a mobile home. And if you check on the title of that mobile home, you're going to see it looks just like a vehicle title, like a trailer title, right? It is not it's not titled.
It's an RV, right?
It's
a big RV, right? So big difference. If it's an RV, we can't do mortgages on RVs, right? So big difference when it's still an RV versus when it transitions. So big thing there. A lot of documents. You want to talk about the document that's required?
Yep, in a minute. But for real estate lending, remember, we need to have real estate to lend, to have a real estate loan. Other than that, it'd be like a chattel loan. You'd be getting a loan for the item like you would for a car or whatever. So that's the first point to consider. Then the next point to consider is going to be when you do have to originate this loan, you have to be aware that there are certain additional documentation requirements which should prudently be disclosed up front, as we like to disclose all of these contingent liabilities. May not occur, but it's better that you put it on there. So when the manufactured home is brought to the lot, it has a HUD decal plate on each end of the structure. So you're going to have two pieces. Each piece on one corner is going to have what they call a HUD decal plate that's going to have some identifying information for the structure, for the manufactured home, including the serial number, right? And that's that decal plate basically states that it conforms to all the manufactured home guidelines that HUD requires in order for the manufactured home to be able to be financed. Right, so that's a key component. Remember also, there is a time and age limit on manufactured homes. I believe it's 1976 for all type of scenarios. Fannie Mae, FHA. I think Freddie Mac may be a little bit more restrictive on the age. So be on the lookout for age restrictions. There's also a manufactured home select program, which offers preferred financing if the manufactured home is newer. So you would have to check those additional overlays that they put for that program in order to be able to get it. It does offer better rates for sure, like 1 point lower pricing. So the HUD decal plates have to be located. Most of the time they're painted over, scarred up. You can't read them. So one of the documents that we put in the disclosures is for the verification letters from IBTS. That's the company that does these verification letters. You send them an email, put in the order, put in the serial number. You got to know the serial number, and then they'll go check the database and say, yep, here's your data plates. And they'll send you photos, a letter with photos and verification of the data plates. So that you would need to provide that to underwriting. That's a decal plates. The data plate is another item that's inside the property that has additional identifying information, and that also needs to be located and photographed by the appraiser, as do the decals. That's why if that's not available on the appraisal, or if what the appraiser photograph is not legible, then you would need to order these letters. So that's why these letters do have a cost, like $125, $150 per letter. One for the data plate, one that covers both decal plates, right? And then an additional item you need to be aware of is a structural foundation report completed by an engineering company. Those can be $500-$600. Those are a requirement on all FHA manufactured home loans. Requirement. If you don't disclose that item, then we're going to have a tolerance cure. So, and on conventional loans, they will be required only if brought up by the appraiser. The appraiser said, hey, looked a little bit shabby down there, and the foundation, I recommend an inspection, looked a little rusted, whatever the appraiser, because when they do the manufacturing appraisal, they're instructed to review and comment on that, because if there is an issue, underwriter is going to pick up on it right away and say, oops, I need this structural foundation report completed by an engineering company, right? So not a requirement for conventional, is a requirement for FHA, but recommended that on conventional that you disclose it, and are required to disclose that on FHA. And obviously you want to disclose the decal verification letter and the data plate verification letter. So don't get in trouble with your tolerance cures and manufactured home loans. If you are going to do it, keep an eye out on those items and you should be okay. So now I'm going to give you some examples here of some purchases. Real important thing to note, cash out refinances are now possible on manufactured homes. They're already risky enough as it is. They're already, there are higher rates. I'm not going to say they're jacking up the rates on it, but there are loan level price adjustments that are present because the home is a manufactured home. So, you do have higher rates that you're going to note right now. If you remember the rates that Nick just gave you for like regular FHA. So this is our manufactured home purchase FHA, 96.5% LTV. You'll notice 7% is the par rate, and you can buy it down all the way to 5.5%. It's a little bit of a choppy looking rate sheet there. You got to dig deep because you have different opportunities. It does, you see like from 6.25, all of a sudden it gets really expensive to 6.125. So, you look for the sweet spot yourself there. So this is FHA. Now we have a first-time home buyer, 97% LTV, and rates are a little bit higher than your typical first-time home buyer. The typical first-time home buyer quotes like around par. They're probably around 6.5. I've been seeing them around their 6.625. So you see there's a little bit of a premium here for manufactured home, like almost $5,000 at 6.625, versus I've been seeing the first time home buyer quotes around 6.625 at par for similar FICO scores. So still good option because manufactured homes are usually cheaper. Now we have our conventional primary, 5% down. So you'll see gets a little better. Let's see how they compare on our first-time home buyer. 7.25 is costing $970, and here 7.25 is at par. So actually, in this case, our 5% down option is giving us conventional is giving us a better rate than the first time home buyer, which is usually not the case. But I would assume that is because the double risk of first time home buyer combined with manufactured home, that definitely has to they have to tweak the interest, right? So now we're going to make it, excuse me, interesting, as Nick had hoped that we would have. Oh, just letting you know, I didn't put a VA quote on here, but it's the same 100% financing on a manufactured home on VA because I wanted to jump straight into this one. Now, we know that our investors love manufactured homes, and hardly nobody can do a DSCR manufactured home, right? Well, we can do it. We can actually do them. We can do multiple DSCR options. You're going to see them right here. This is obviously, the whole thing about the manufactured homes is the cash flow is so much greater. So you would usually expect the DSCR to be above 1.0, right? So here is 70% LTV, it's 30% down payment. And look at, rates looking pretty good there actually for what we're talking about here, right? 9.25 is a little bit of a lender credit. Then, you can start buying it down there. It's roughly a quarter point for each eighth of a point in rate. But look at, since we do get non-QM here, we can go up to 5% in total loan fees and everything. So here we have 7.375, and that's at a cost of about two and a quarter. 2.5. So your loan amount here, no, 280. That's a little bit higher. So it's almost 3 points on that one. But it's still 7.375 manufactured home DSCR, right? I mean, doesn't get any better than this. But wait, there's more. You would probably not find a manufactured home that's not cash flowing, like I mentioned. But for that odd scenario that's what's happening, believe it or not, we have manufactured home DSCR loans under 1.0, right? So this is our 0.75 to 0.99 option, right? This is a mind blower when you can think about it, but it is true. This is not a quoting mistake. 9.75% is our lowest cost option, but you can buy that puppy down all the way to 7.99%. And if you thought it couldn't get any better, here's our less than 0.75 DSCR option for a manufactured home, and we can still buy it down to 8.49% rate with 9.75% still being our lowest cost option. But now we're talking about something that I don't know how they do it, but they're doing it. Manufactured home, less than 0.75 DSCR, 30% down. We have the solution for you.
So these would be like our Key West $1 million manufactured
yes,
homes.
Yes.
That have a long-term rent of $4,000, but short-term rents for $40,000 a month. Right?
Man, yeah, it gave me goosebumps, dude. Exactly, because
Jose's done a couple of them, guys. Yeah, by the way, so
you actually, the last one that I did was in Key Largo. It was about $900,000. Exactly. And it was rate and term second home refi, and the guy was doing Airbnbs on it. So when he wasn't living in there, so yeah, that's the perfect example because most people are in the box. They're thinking, wait a minute, how would I use that on a manufactured home? And when they're like $90,000 here, well, they're not $90,000 in resort areas. There's a lot of places that are resort type areas that have manufactured homes, very expensive and doing very well as rentals.
Exactly. No questions in the chat. That's surprising. Manufactured homes are tricky, guys. So hopefully you guys are soaking it all in here. But I don't see any questions.
I do just want to reiterate, the DSCR options Jose was going through. Remember, for those of you not familiar, that is no income verification, no employment verification. So we're talking about buying a manufactured home with zero income or employment documentation for an investment property, and it doesn't even need to cash flow. Doesn't even need to come close to cash flowing for a couple of those offers. We do have a question that came in from Nick.
Yes. Is 30% the minimum down payment? Is what Nick wants to know. Yeah, I'm assuming he's asking about the DSCR option. Yes, 30% is the minimum, or should I say 70% is the maximum LTV, and it is for purchases.
All right, perfect. Well, let's go ahead and wrap it up then. We appreciate everybody tuning in. Remember, we do this show at 11 a.m. Eastern Time every weekday, go through the different live rates, and we do a deep dive into a different topic every day. Let me see. We do have some questions coming in here that we could answer, I believe.
Yeah, here we go. We got A. Smith. Can the land be in the loan for a primary purchase? The land must be in the loan. Remember, that's what Jose was saying. Jose, you want to talk?
Yeah. Yes, it definitely
Oops.
it's combined. You know, they you can't have one without the other, or else it would not be a manufactured home. It would be a mobile home. But what I can say um, is that if you're doing a one-time close, you can use that type of loan to buy the manufactured home, buy the land, and combine them together and put it on the lot. So
With a conventional program.
with yeah, with the one-time close, whether you go FHA, conventional, they do offer that option for the manufactured home. So it's pretty cool because it's you're talking about. I mean, assuming the manufactured home is not in back order in the factory, that's a pretty quick construction loan that's going to close into your end loan there. Because I mean, how long is it going to take to trailer it to the site, put it together? You know, you close on the land and just assemble your manufactured home and move in.
Yeah. All right. And Maria is talking about the tag. She's giving some advice here. Ask about the tag from the start. I had a real estate deal that was held up for some time with the appraisal due to not being able to locate it. It was indeed painted over, like Jose mentioned. Even if they can see it painted over, if they can't see the data, guys, they can't verify the data, right, Jose? So even if you can see it painted over, if you can't get a clear scan, you're still going to be stuck at square one, correct?
Yeah, because the whole point here is they're verifying the history of this manufactured home, and they need to make sure that it conforms in age and in design to the HUD specifications. That's key, you know, because it could be a non-HUD manufactured home, looks like it is, but if it's not verified, then you can't close.
Very tricky,
All
guys.
right. So, loan officers here at the Mortgage Calculator, obviously, loan consultants here to walk clients through these different issues and advantages and, possible fallbacks of a manufactured home loan. So again, we do this show 11 a.m. Eastern every single weekday. Go through a different deep dive topic. We will have another topic tomorrow. So thank you everybody for tuning in, and we hope to see you tomorrow for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.
Thank you, everybody.